Okay, good morning, everybody. Long time no see, right? Okay, can you see my screen? Anybody?
Yes, we can see your, well, we cannot see your screen. We can see you.
Oh, okay, thank you.
Yeah, there we go. The PowerPoint.
Okay, thank you.
Uh-huh.
Okay, good morning, everybody. Welcome. Happy 6th February 2021. Hard to believe we're there already. Hopefully everybody is doing well and everybody is safe. This old fart got his COVID shot, his first COVID shot this week. So hopefully I'm on my way to being semi-protected. Want to back up a slide here. What do you think of my new slide here? The best real estate investor watering hole in North Texas. Can I get some feedback on that? What do you think about that? Anybody? I kind of think it's a watering hole, isn't it? You come in, drink up, you drink the Kool-Aid, you listen to the real estate investment education that we go through several times a month. And I thought it was kind of cool. Nobody else thought it was cool, huh?
Very Texan.
Who's that, Ruth Ann?
There's a couple in the chat that are saying good one and nice tagline.
Okay. Yeah, I kind of thought it was appropriate, right? And, I'm always trying to do things that stand out and be a little different than just plain Jane, what everybody else is doing. So yeah, I think the watering hole for real estate investors is a pretty good one. So anyhow, we'll see how it works. So grab your drink and your breakfast and get comfortable. And we're going to go ahead and get started here today. Welcome to the group for all the new folks. I know we have quite a few on the call today that are new. Hopefully, matter of fact, for those that are new and this is your first event, please drop it in the chat and tell us how you found out about us. We're always trying to find out what marketing's working for us to promote the group. So just drop it in the chat and let us know how you heard about it. So I'd appreciate that. Okay. Also, if you can't hear or see the screen, please drop that in the chat as well. And Pam will be able to help you out. Also like to know where you're calling in from. When we have physical meetings, it's pretty easy to know that you're probably local around Fort Worth, Dallas, Fort Worth, and from Texas. But since we've gone to Zoom, we've had quite a few call in from out of state or other parts of the state. So drop it in the chat. Let us know where you're coming in from today. Like to hear from you. My assistant Pamela is on the call today, and she's going to help in any way needed. Her number's right there on the screen. You want to go ahead and say hello, Pam?
Hello, everyone. I'm actually maybe the furthest away today. I'm coming from Lubbock, so I had to come down and check on Mom and do a couple of things down here. So I guess we figured it out the other day. What was it, Tim? Been nearly 2 years that I've been working with Tim. And so I enjoy it. And I'm always here to help. If you have anything that you need, give us a call. Know that I'm in the office until 1:30 every day. So if you don't get us past that time, Tim's busy and I'll get back to you just as soon as I can the next morning.
And this number is the direct office number, but it also accepts chat too. So it's a Vonage business line. That's a good phone system. If anybody's looking for a good business phone system, we can give you a promo link on that as well.
But also
Okay.
know that if you try to send us a picture of a house,
Yeah.
something of that nature, we will not get it on that.
Yep. We can take links. We can't take pictures.
Right.
Okay. For networking purposes, I recommend that you turn your video camera on or add your picture to your profile so that people can get to know you and recognize who you are, because someday we're going back to physical meetings. I'm not quite sure when that's going to be yet, but we are planning to do that. But just for networking purposes, it's always nice to know who you're talking to and what you look like. You don't have to be all duded up and pretty and gorgeous and stuff. I know some of you want to be, but we just want to know who you are and get to know one another. So please consider doing that. For best quality of video and audio, I recommend that you turn off any kind of unnecessary programs, anything that does any kind of scans or taking up any large amount of computer bandwidth, internet bandwidth. You'll find that that'll improve the quality of the video and audio. A headset may improve your quality of sound. You're welcome to wear a headset. Sometimes I do, sometimes I don't. I have a really solid high-speed internet here in the office, so I don't typically have to, but you may want to. Please mute yourself if you're not speaking to minimize any kind of background noise for the recording. Please put your questions in the chat and begin with a capital Q, just so that Pamela can spot the question easier, and we'll do our best to answer them all today. We're gonna, every 30 minutes or so, we're gonna try and answer questions that may have come up from the content we just covered. So if we happen to not answer your question, we'll do our best to we will get back to you and take care of that and answer your questions. If you have a longer question, more detailed, please don't use the chat. Email it to us at this email address here, and we will answer. Be sure you include your name, phone number in case I need to call you for further information, but we will answer those questions. If you have any quality issues whatsoever with video or audio today, turn your video off first as the first step. And if that doesn't solve it, then go ahead and log off and log back in using the same link from Zoom, not the registration link, but the link that you received in your email from Zoom, and we'll still be here with our smiling faces waiting for you. Okay. You won't have missed anything because the video will still be going and it'll be covered there. So who are we? We're the West DFW REI group, and we are a group of like-minded people that meet, network, brainstorm, share ideas, motivate, provide moral support, and try and help each other learn and grow and do more deals to be successful and win-win for all of us, okay? That's what it's all about, is trying to help each other do more deals, make more money, and take care of more sellers that need our help. And there's a lot of them that really need us and need us bad. And we're going to talk about that today. So, and our other slogan is come network, learn, and do more deals. And that is what we're all about. Come network, learn, and do more deals. Okay. This is not an I business or a me business. It's a we business. So for those of you that were on the first 30-minute call, I already talked about this, and I think it's important. I cover this on every call. When you come into the group webpage, everybody's looking for more deals, I suspect. And if anybody on the call has got more deals than what they can handle, please put that in the chat and we'll be happy to take care of those for you, okay? But if you're looking for more deals, come right here on the homepage and click on property list, and you'll see a list of properties pop up down here, and you can go click on those and get more information. So you may be able to find your next deal right here. Also, if you're a paid member, you get a free investor website included in membership. And when you post on that web page, it propagates up here to the group page the westdfwreigroup.com, and it displays right here. So these are members' properties from their website that are displaying on the group website, and we're helping you sell them. We don't charge you for that. We're just trying to help you sell those properties quick. Hope that makes sense. Hope you understand what the value of that is. Okay, sponsors. I don't have all the videos up. Pam, you want to go ahead and?
We have three.
Okay.
We have Ruth Ann and Robin, and we have Thomas with HC Roofing.
Okay.
So
Ruth Ann, you
choose.
want to go ahead and go first?
Yes, thank you. I'd be glad to. For those of you that don't know me, I'm Ruth Ann Dunham with Service First Mortgage, and I've been a lender for 28 years. And with this company, 9 years. It's a really great company. And I'm a traditional lender in almost every sense of the word. However, if it's something that's out of the cookie cutter, I have a sister bank that I can do many things with. I can do financing of raw land, which is unusual. I can do 0 down loans if there's other collateral to be put up. I've done that numerous times. I can refi your hard money loans out and get you in a permanent loan. I can do delayed financing where you pay cash for a property, pull it out of your 401k, out of savings, whatever, buy it for cash. And as long as we do it within the first 6 months, I can refinance that at today's value, not what you paid for the property. So if you have something creative and need me, that's great. I also provide down payment assistance for your buyers. They may have thought about down payment, but they didn't realize closing costs can run $5,000 or $6,000 because of all the taxes and insurance and everything. So I can provide down payment assistance for people in the state. They don't have to be impoverished. Good interest rates for those loans. They're not 5 or 6% interest, not even 4. So all under that, even when you don't pay the money back. So hopefully there's something in that that can make you some more money.
Ruth Ann, you just mentioned you were with Surface First Mortgage for 9 years. You must have become a sponsor of the group about that same time then.
Possibly. Mm-hmm. Yes.
It's been a long time, hasn't it?
Right. It has.
Yep. Well, thank you for being a long-term sponsor with us. We appreciate it.
Thank you.
Ruth Ann has helped a lot of our members over the years with refinances and investment property purchases and stuff. So keep her in mind as a really good resource for funding options for you. Okay, who's next? Robin?
Good morning.
Good morning.
There's my fake picture up there, so you'll have to deal with that today.
That's okay.
I'm glad to be in part of this group. Our Bearcat Capital is a company that I own, and what we do is buy real estate loans, real estate mortgages, notes. Most of the time they're secured by single family, but we'll come across now and then some small multifamily or some small commercial deals that we'll look at. And when we're looking at these notes, they don't have to be notes where the borrower is paying. They could be in default right now. They could be semi-performing, as we call it. They're making a payment every 90 days, inconsistently, maybe not a full payment, or no payment at all. So if you have something or hear about something that maybe somebody wants to go ahead and get their money now and not wait for the next 10, 15, 20, 30 years, give me a call. I'll look at it. No obligation. I won't pester you. I hate people like that. And if I can help you with a note, you're trying to create a note. I'm not an attorney and I don't pretend to be one, but I can look at kind of what you're doing and maybe give you some advice or give you some assistance or send you to somebody that can help you a little bit more. So all my information's on the website. And of course you can type in your info or question here privately or publicly on the chat. So anyway, thank you again.
Thank you, Robin, and we appreciate you being a long-term sponsor as well. Okay, I think next was Thomas. Are you there? Mr.
Yes.
Cable? Hey, good morning.
Morning. How are you doing?
Welcome.
Hi. So we are HC Roofing Solutions. We have we're a family-owned and operated business in the Dallas-Fort Worth area, handling all of your roofing needs. We primarily deal with real estate investors. About 70% of our business is with real estate investors, flippers, or buy and hold. So anytime you have a property and you have a roofing question, we're more than happy to go out and take a look at it and let you know what needs to be done with it. If it can be repaired, we will repair it. If it needs to be replaced, we'll let you know that it needs to be replaced. But typically we just want a good, healthy roof that's going to last, until the next hailstorm. So that way, you're not necessarily having to pay for it. We'll let insurance pay for it. That's what you're paying insurance companies for. So, and if the roof can make it until that time, we'll do what we can to prolong the life of the roof so that it can make it to that point. Sometimes that's just not possible. And the last thing you want is for a roof to start leaking and cause thousands of more dollars of damage on the interior that's that could have been prevented by doing something on the exterior. So that's what we're here for. We're here to help and make sure that everything is good and secure. If you have rental properties and just want us to go by and take a look at those, owners don't look at roofs, much less renters. So now we're more than happy to go by and just take a look at those and make sure that we've had 70-mile-an-hour straight line winds through the Metroplex in the last year on several occasions that have caused damage where shingles have blown off. And the last thing you want to you don't want to find out when you have a new water feature on the inside of the house because water is pouring down. Let us go and take a look at it and make sure that everything is good on the outside. And there's no charge for that. So like I said, I'm here to help. Whatever I can do, just give me a call. Thank you.
Thanks, Tom. Appreciate it. Thanks for coming. Dusty has done quite a few roofs for me over the years since HC Roofing has been a sponsor of the group. So we appreciate that. He's also gone out and put on a tarp on one of my houses during the storm that was leaking that I didn't know about. So that's the kind of stuff that they'll do for everybody in the group. So keep them in mind. All the contact information is on the sponsors page on the site. Matter of fact, I think I have it linked here. Nope, I guess not. But it's on the sponsors page of the group website. So we'll show you that a little bit later. Did we have anybody else pop in, Pam?
No, there wasn't anybody else.
Okay. All right. So we're moving on here. So I don't know if anybody saw it in the calendar of event. If you read it closely, you would see that we've added a new thing to our monthly meetings now, and that is a document of the month. And that document of the month is for action takers, meaning for those of you that register and attend the meeting. At the end of the meeting, we're going to share a document with you that's going to be appropriate for the topic of the day. And today's document is called a letter of addendum and agreement. In other words, your CYA, cover your assets. And we're going to talk about that at the end, but just know that you'll be able to get that. It's going to be downloaded through Zoom to you for those of you that are on the call at the end of the training today. So that's something new we thought might be of interest to you. So this way you get some forms that you need in the business to help you grow your business with. These are things that I've been using for 20 years in the business. So hopefully they're going to help you. Think Realty benefits. For all of the members and non-members, you're eligible to become a Think Realty member for free. All you have to do is in this presentation, when you download it, you can click on this free link right here, or you can just text the word West DFW to 96270, and you'll get a link back to register with Think Realty. When you do that, you can establish accounts with all these different services and products and be able to get discounts at all those different places. The big one here is eBarnett is a Home Depot store. They've now renamed themselves to Home Depot Pro Specialty Services, and they offer huge discounts, even bigger than Home Depot Direct. So give that some thought. It's a free membership. Go click on it and register. And remember, you don't start saving money by just registering with Think Realty. You have to follow the instructions in your welcome email on setting up with Sherwin-Williams, setting up with Home Depot Pro Specialty Services, you know, with 1-800-GOT-JUNK and all these other places that you want to use. You have to go create the accounts with them. A lot of you have Sherwin-Williams accounts already. They can merge those accounts and use them and still get you credit. There is a problem right now with Sherwin-Williams flooring. They are renewing the contract, and there's been some communications problems. They're trying to resolve all that before they start promoting it again. But I've been told it's coming back with hopefully better communications. So, okay, sponsors. You know, we're always looking for more sponsors. So if you know of anybody, if you've dealt with a service, a store, a product that you think would be really good for the group, come see me about it or refer them to me. But we can use any of these kind of services. Quite honestly, I'm looking for a CPA myself. My CPA, after 8 or 9 years, I don't know if he's gotten old or tired, but he fired me, so you don't want to do my taxes anymore. I do have a bit of a difficult tax return because of how I'm structured and all the things I do. But I am looking for an investor experience CPA, if you happen to know of anybody. And then all these other services, you know, if you know these people, have dealings with people that would be a good fit for the group, send them to me. Let's talk to them. Okay. We're trying to build an established group of sponsors that you can trust, somebody that you can send your grandmother to. All the sponsors you heard from today are just that. You could send your grandmother to them and then be able to sleep at night because they're going to take good care of them. So that's kind of my guide on selecting sponsors for the group. Okay, why are we here today? While I'm switching this over, anybody want to tell me what their thought is on the topic, what it means? Anybody on the call done a sub-2 deal? Anybody? Nobody? Okay. Or is everybody just sleeping? Nobody wants to say.
Everybody's shy this morning.
Okay, can you see my PowerPoint now?
Yes.
Thank you. Okay. So this is a topic that has been very popular over the last many years. You can tackle this topic from a number of directions, but I always like to make sure I cover this topic first so that people understand more about what a subject to deal is and the pros and cons of taking the deed and what it means to you and to the seller to make sure that everybody is on the same page. Getting a free house or close to free sounds really cool, but there's a lot of things to consider, and not every free house is necessarily a good deal. So there are pros and there are cons to doing that and taking that deed. So we're gonna get into that and talk about this. You're welcome to ask questions or put questions in the chat as we go, because I want to make sure that you understand this. This is an important piece of this whole transaction. This type of transaction is you need to understand the benefit, the downside and the upside of taking that deed from somebody in these types of deals. So what we're going to cover is, what does buying houses subject to the underlying mortgage mean? What does taking the deed mean? What makes a good sub-2 deal? What makes a bad sub-2 deal? What's the advantages? What's the disadvantages? What kind of sellers would consider selling this way? What kind of property can you buy? What's the risk to you? What's the risk to the seller? What's your exit strategies, your potential exit strategies? What are you going to do if the lender calls the mortgage due? And a new one I just added is, what is a forbearance, and is it going to be a deal killer for you? Okay. These are all really important topics that you need to understand. So this isn't the how-to piece of doing subject to deals. It's just understanding what they are, how to find them, what to look at, so on and so forth. Okay. What's going to cause you to lose sleep at night in these types of deals? Because these are a little different than just your standard wholesale deal. How to get subject to deals closed, setting expectations with your seller for success, and a few things not to do. There's probably a few of those, right? There's a few that I've learned over the years, and we'll talk about additional things too. And then at the end, I'm going to show you the information on the workshop. I'm doing the all-day how to buy subject to deals with little to no money. This is the how-to piece, the step-by-step. Today, we're talking about what are they, what to look for, the pros and cons, the benefits, the disadvantages, that kind of thing. But then on March 20th, we're going to talk about step-by-step how to buy with little to no money. This is how I grew up in the business 20 years ago. And I've given this presentation numerous times, given this workshop numerous times. So I'm starting to learn how to do it pretty well, I think. And hopefully you'll enjoy it. So I'm just going to flip through these things because I think most of you know me, but for those that don't, basically I went in Marine Corps right out of high school, met my wife on Christmas leave. We're coming up on our 46th year anniversary. I quit early in the Marine Corps, only spent 24 years instead of 30. Spent 8 years out at Lockheed on the F-35 program as a systems engineer with BAE Systems. But I knew that I didn't want to spend any more time than I had to working for somebody else after all those years in the Marine Corps and then at Lockheed. I wanted to get out on my own. So I started my real estate investing business in 2000, spent a lot of money on education, going to seminars and boot camps and buying courses and stuff. But I just didn't want to reinvent the wheel where other people had already learned from those mistakes. So that's why I spent the money. I am a student of the business. I'm all the time learning new things, and that helps me share those new things with you. I gave my resignation at Lockheed in July 2005 for a year later. A lot of people didn't think I could stay a year. They would escort me out because of all my top secret clearances and stuff, but I stayed. and I haven't looked back. I've been full-time since July 06. My wife kicked me out of the house in 08 and told me to go find an office. So I did that. That was the best move that I had done. Although I still work at home sometimes, it is nice to walk in the office. We now have bought an office in Weatherford, downtown Weatherford. So we have a place to do business, and it's just more professional feeling, and I enjoy it here. So I was a mentor for all around the Grand students for about 5 years for Texas and Canada. That was quite interesting. And, you know, being the teacher, I still learned an awful lot mentoring those students. And I really enjoyed it, but it got to be the point where he just wanted to keep giving me more and more and more, and it was interfering with business. So I resigned from that. I've taught numerous sub-2 classes over the years, and that's why we're here doing this today. I love this topic, and I think it's going to be a viable tool in your toolbox in the upcoming couple of years based on what's going on in the market. Launched the West DFW REI group in November of 2009, and I finally have my first COVID vaccine last week. So I'm rocking and rolling, looking forward to getting the other one behind me, and hopefully keep safe. So I hope you all are staying safe and are healthy out there as well. Okay. So before we get into the real content here, everybody been watching the news? You know, have you been listening to what they're saying about the market? Anybody have any feedback, any comments about what you've read, what you've heard about the foreclosures coming or not coming? Anybody want to chime in? Nobody? Wow, we got a quiet group today.
Tim, I'll jump in.
Okay. Hi, Ray.
Just how's it going, man? And I'm still joining. I know you're gonna ask me. Hey, I thought you were gonna join. I'm getting in. I promise you. It's
Okay.
one thing after another, but that's another conversation.
Okay.
With respect to the potential wave of foreclosures, I'm curious to see, you know, with respect to the forbearances, what that's going to mean. I mean, logically, it sounds like there will be, because I would imagine, you know, there's a huge percentage of those people that will not be able to catch their mortgages up. So I would think that that's coming. Timing wise, I don't know when, but logically, I would think that that's coming.
Yep. No, I agree. And there's going to be people that the forbearance is going to help. And then there's going to be people that all the forbearance is doing is buying them a little bit more time before they default. And that's, you know, I'm certainly no expert at it, but that's what I believe. And I know from what I've been reading, a lot of others have as well. I want to show you something. This headline, I don't know if anybody else saw this same headline in the Dallas Morning News recently. Home foreclosure rates in DFW plunge. So that can be kind of misleading if you don't go in and read what it's telling you. Okay. But there's a couple quick things I want to show you in here. Can you see my web screen now after clicking on the link, or do I have to share it again?
You got to share it
Morning
again.
News.
Yeah, it still shows your slide.
Okay. All right. This is one thing that's irritating about Zoom is I have to go back and forth and share screen. So give me just a second here.
Hey, Tim, this is Pam. I can enlighten a little bit about the foreclosure. I was at the courthouse this last Tuesday and was talking to David Stockman, who's one of the trustees there.
Okay.
And, you know, back in November, they told us, you know, get ready, that they predicted that it was going to start back up the 1st of February. And David told me that he had asked the banks, you know, can he go on vacation in the months of March and April? And they told him no. Well, when I was down there Tuesday, we were talking about it. And right now, everything is in halt because of what, you know, Biden has put on and what, you know, the, with evictions and all that stuff. But what I'm seeing at the courthouse at the moment is, it's all your hedge funds, your, like, Smart Buy Homes, those, you know, those people, they're able to foreclose on their homes and everything because they're doing, you know, owner financing.
Correct.
Mostly what you're seeing right now is, and if you're owner financing, if you have the right attorney, they're not even making it to the courthouse. So, you know, right now it's not happening. The word is, it's probably not going to happen. I mean, everybody's got their little predictions until probably about July. So, you know, there was supposed to be 101 foreclosures on Tuesday. When the night before, when I was going back over the list, 25 of them had been canceled. And actually out of that 101, well, actually you can go back to 80. Out of the 80, I think there was only 25 that actually got foreclosed on, and that includes commercial properties as well.
Yep.
So, you know, if you're thinking that you're going to buy your dream house at the courthouse, no.
Yep. No, and that kind of goes along with what I'm about to show you here, and what I've been hearing as well. The couple, you can go read this link in its entirety if you like, but I just want to show you a couple things here that they said. DFW area, 3,544 home foreclosure filings were recorded in last year, which is down 56% from 2019. That's a pretty darn big reduction in foreclosures. Then you come down here and it says, while it's unlikely you'll see another wave of foreclosures like the one we had during the recession, we really won't know how big it's going to be until the government programs expire. So that's another thing to remember. And that kind of goes along with what Pam just said. You know, the government keeps putting the moratoriums on there and extending them. And we just don't know until they stop extending them. Then you have home loan payment delinquencies have been rising during the pandemic. In October, 6.8% of North Texas homeowners with a loan missed at least one payment. That's up from 3.7 the year earlier. So you know it's happening. People are going into default. And if you keep watching, and this is the thing, you're going to have to keep watching what's going on with the job market and the foreclosures. But if they don't fix the economy and get the virus under control so people can go back to work and get employed again and get businesses going again, I suspect this 6.8% may be going up even more. So that's another number to watch. And then here's another interesting statement. Lenders started foreclosures on only 348 DFW homes in the fourth quarter, down more than 80% from the fourth quarter 2019. And that kind of goes along with what you just said, Pam. There just isn't much there. But 348 is a really small number. So anyhow, just wanted to share that with you. Watch that type of news so you just have a better idea of what's about to happen. And again, we're not going to know anything until the moratoriums stop being extended. Any questions on that before we move forward? What does buying houses subject to the underlying mortgage mean? Well, it means that you're going to take ownership of the property and the mortgage is going to remain in the seller's name. So they're going to deed you the property, but the mortgage stays in that seller's name, okay? Thus, you can buy houses with no money. A lot of people don't believe that. How many people on the call today have gotten a free house like this, have had somebody deed them a house? Just drop it in the chat, please. Pam, tell me how many people once they do that, but drop your in the chat if you've bought in a house and gotten it free. So what does taking the deed mean? Well, the deed is the title or the ownership of the home. Taking the deed means the seller is deeding the ownership or deeding the house to you, and that's where taking the deed comes from, okay? But that's what you're doing, is you're getting the deed on the house when you buy a house subject to. That's what it means. This is the end result when you buy houses subject to the underlying mortgage remaining in place in the seller's name. It is two different documents. So you have the deed, that's your ownership document. You have the mortgage or the loan, that is, you know, the loan document. So that's why it's two different things like that. That's why you can sell a house but leave it in the seller's name. This part's important. What makes a good subject to deal? Actually, all of this is important, okay? But it's important to understand what a good deal is. And sometimes you have to make a good deal. What you're going to get in the how-to, you'll get a little of it today, but in the how-to part of it in the workshop is, you know, how to take what may be not such a good deal and turn it into a good deal. So the first one is a truly motivated seller with a mortgage on the property, right? In order to be a subject to deal, it has to have a mortgage on the property. So, you know, you're looking for that motivated seller. Trust me when I say the world is a lot easier, life is a lot easier when you have a truly motivated seller that's willing to work with you to prevent a foreclosure or prevent damaging their credit. If they don't care about their credit, they may not be so cooperative, and those are the kind of people that you may want to stay away from. Difficult sellers, difficult owners can be a real pain and headache for you. A seller that needs to sell fast, regardless of the reason, that could be a good subject to deal. Okay. There's a lot of things in life that cause somebody to have to move quickly. We're going to see a lot of that happening when they lift the moratoriums, I think, and everybody's going to have a different reason for selling fast. And there's going to be people, even though they're protected by the government extensions and the moratoriums and stuff right now, there's still going to be people that are going to need to move fast because they're getting a new job somewhere and moving, or they're divorcing or something like that. So it's not all dependent on the moratoriums being lifted. A property with one or more mortgage or liens against it, possibly over leveraged. This could be a good subject to deal. Depends on how you structure it, depends on what the numbers are. But you have to look at this, and this is part of the pre-screening. How many mortgages, how many liens? Are there other liens on it that's beside a mortgage? All that stuff added up, it could be over leveraged, and it may or may not be a good deal. A property in distress, in a distressed situation financially and behind on payments. You know, so that could make, and that's what a lot of people think of when you talk about subject twos. They think about a property that is behind on a payment. Okay, not everybody is behind. So you'll still see a lot of subject to deals out there just based on them trying to move quick. They might have great credit, never missed a payment. They just want a fast solution, and this can be that fast solution. A property in a distressed physical situation needs a lot of repairs that the owner can't afford. They need to sell, but they can't afford to do the fix up, and they have a mortgage on it. A property with no equity. So, you know, this goes back to, you know, a property with no equity. Is it a good sub-2 deal? It may or may not be, depending on location, repairs, you know, when you buy a property with no equity, you can increase its value when you sell it on an owner finance wrap. So depending on the property, location, condition, and your buyer, can you raise the price of that home enough to make it a deal? And then if you have no equity in it, you have to learn how to structure that deal to minimize your risk in that deal. And that's what the how-to part of the class is going to cover on the 20th of March, is how to go about doing that and protect yourself. A property with some equity and the seller is willing to wait to get paid. This could be a great sub-2 deal. I've done a lot like this where they had some equity in it. And I do believe that you're going to see when you start seeing the pre-foreclosures coming out, because of the appreciation rates over the last several years going up so much, I believe you're going to see sub-2 deals that are going to have some equity in it. So you're going to either have to have some cash to give them as a down payment, or negotiate that paying, you know, them holding a note at some point. I've done a lot of deals where the seller was just happy to get rid of the debt and he's happy to wait for his equity that I owed him. I've had people wait for 5, 8, 10 years. They were focused on preventing a foreclosure and just getting rid of the debt. So you just have to learn how to negotiate those types of deals to get the seller to wait for that equity. And they will do it. If you're sitting in front of the right motivated seller, they will do that. They might need some money now, some later. They might be able to wait for all of it until later. It's hard to say until you ask. What could make a bad sub-2 deal? A property that's over leveraged excessively, meaning too much debt, and it could be a short sale. But not everything is a good short sale either. So we're not going to get into that today, but that could be a bad deal if there was too much debt and it had an excessive amount of repairs. I don't know how many of you would believe this or not believe it, but it doesn't take a family very long to go in and totally destroy a house where it's almost impossible to make it sellable with all the repairs and stuff on it. I mean, it's amazing how quickly somebody can destroy a house. So they may owe too much and have all these repairs on it. That could be a bad deal. A property with uncooperative, difficult sellers or a difficult spouse, that could make a bad subject to deal. Okay. Anybody want to chime in on why they think that might make a bad sub-2 deal? Anyone? Unmute yourself if you have an idea.
Hey, Tim, this is Robin. I would say, to having dealt with situations like that when it's just a note and you're trying to get somebody to start paying again or try to do some kind of modification, if they're not on the same page, then you're talking to, you know, two people that don't even know each other is kind of what it comes out to. And you're going to hit your head against the wall because if they're both on the title or they're both in on the lien, then you've got to have both signatures, and
Yep.
It's going to be tough. You might as well, I just say, you know, cut your losses and go on to the next one.
I agree. But here, just to take that part is very true, but to take it one step further, it's not just about getting them on the same page at the contract signing. It's you are at that point when you sign that purchase agreement, you are now in a long-term relationship with them, whether they like it or not, whether you like it or not. And if something happens to that house in the future, you need their cooperation and their help. They need to respond. And I'll give you a quick example. One of my subject to deals many years ago was with a Marine who transferred to Iwakuni, Japan after I purchased the house. Well, about 2 years into it, the house caught on fire and I had to file an insurance claim. And had I not had a cooperative seller and good communications with them, that would have been difficult, because remember, I got to have his authorization. Even though I had all the third-party authorizations, some lenders won't accept a third-party authorization to release information, and they want something from the borrower. And that is very, very important. I talk about it a lot in the class, in the workshop. Very important. And you also want to be able to tell them when the loan is paid off. So you have to have a way to communicate with them, and they have to understand that. And I've got some tips and tricks on how to help with that. But this is a big one. If it's one of those gut feel ones. If they're giving you a hard time now when you're trying to help them, what are they going to do when you already have the house, you've already put a lot of money into it? Do they really care at that point? Maybe not. This could be a bad deal for you. So I know I talked about that quite a bit, but that could be really important in my opinion, if you are trying to push a noodle uphill. Okay. Trying to talk to that difficult seller. If they can't realize you're trying to help, then it may be a headache down the road. A property with too many repairs and arrearages, all that adds up to money, a lot of money, which means it's going to be harder to find the buyer that qualifies for it. Either you're going to do some repairs and catch up the payments, or you're going to have a new buyer catch up the payments and the repairs. But if there's a lot of those repairs and a lot of arrearages, then that just makes that a really tough deal to try and get done. I have talked to sellers that have been in arrears 4 years. And oh, by the way, most people that are in arrears, they aren't maintaining the house. So you can imagine that 4-year-old arrearages, the house was in terrible shape. So that's just something you have to be careful of and pre-screen very carefully. Ask a lot of questions. A property scheduled for the auction and not having enough time to solve the problem. You can only move so fast. And unfortunately, in my experience, 20 years of doing this, many people in default will wait till the last couple of days before the scheduled auction to go look for a solution. And, if they come in on Sunday before the Tuesday auction, you're going to have a tough time trying to solve that problem, depending on the deal, but it makes it tough. Makes it tough. A property with reverse mortgage. I've yet to figure out a way to make this one work. I don't think there is a way. I don't know if anyone on the call knows of a way. Maybe Pam, she's been around a long time, but this one here is a big no-no for me. A property with a small local credit union holding the mortgage. I've not experienced this, but I've heard that some of these small credit unions may not tolerate it and they may call it due. Haven't dealt with it. I've only heard about it. So I'm just throwing it in there as a precaution. Just be aware of that before you move forward on something like that. What are the advantages of buying subject to? By the way, this can be an interactive conversation. So if people want to unmute yourself and chime in, you can do that as long as you don't have a bunch of noise, kids screaming, dogs barking. But happy to have you chime in here and throw in your comments and experience and questions and stuff along the way. So what's the advantage of buying subject to? Anybody?
Don't have to invest your own money.
Speak up a little bit, Max. I couldn't hear you.
You don't have to put in any of your own money.
Possibly. You're leveraging other people's money and credit, right? Because that seller, they have their credit and their money tied up in that house. That's how they bought it. So you're leveraging what they've already done. Okay. In many cases, you're buying houses with little or no money. Now, as I mentioned earlier, I think you're going to see some pre-foreclosure deals that's going to have some equity in them. So you're going to have to either be prepared to pay that equity that's agreed to, or negotiate something down, something later. But many subject to deals, depending on their circumstances, are going to be little to no money. And that makes it a very, very powerful house buying strategy. They are lower risk because you have minimal money involved. The credit check, or your credit check, is not required. So your credit is protected and not affected, meaning you don't need your credit to buy these houses like this. You're not assuming the mortgage. You're simply stepping in and taking over what the seller has already done. Big difference. You are not assuming that mortgage. That means that somebody with a 500 credit score, if you knew how to do these types of deals, you could buy houses all day long, and you know, your credit never be utilized for it. It's not going to limit you. They're quick closings. Once you get the contract, you can have these kind of deals done in just a few days. Really depends on the title company and what their workload is, and how quickly you can get all the documents you need from the sellers and get it to the title company. It's all done really quick. Okay. You can help so many families in need that realtors may or may not be able to help. You know, this is a strategy that a lot of realtors don't understand. And there's a lot of families that are going to need these types of transactions. And that's where we all come into play. You have unlimited buying power with no limits as to how many properties you can purchase. Again, going back to the credit thing, you know, if you go to a conventional lender, Ruth Ann, are you still on the call? What is it, 7 or 10 properties based on your personal credit?
It's 6.
6? Okay.
It's 6 to a certain point, and then if we spread them around with different investors, we can do more.
Okay. So you do have limitations if you're buying conventionally, whereas buying them this way, you have unlimited buying power because of the way the transaction is structured. Is there any advantage to a seller? Okay, this is a question to you. Is there any advantages to the seller in doing this type of deal? Somebody chime in here for me.
Does it help their credit score? Like if you're paying their, the mortgage is under their name, and so if you're holding the house for a long time,
Yes,
is
sir.
that it'll improve their credit score?
If they are behind on payments, you're going to start improving their credit by paying the payments on time. So that's one of your big pitches to them, you know, for somebody that has bad credit. Not everybody is going to have a credit issue, but if they do, then that is certainly another point for it. Another benefit is, anyone?
This is, Tim, this is along the same lines of what you just discussed. Let's say a person like you've already, you know, you've described, you got a person who anticipates that they're not going to be able to make their payments. This is a way to protect their credit.
Absolutely. Absolutely. And I've had several of those over the years. So they're planning ahead. I love those people. You know, when you talk about motivated sellers, you know, their credit is important to them and they want to keep it that way. One of the best subject to deals I did in Azle was that way. The seller had just lost his job. And at the same time, mom passed away, and he needed to go home and help dad in Minnesota. And, you know, this was a $300,000 house. And I sat down with him. We walked through the subject to strategy. He said, okay, I just need to protect my credit. That's I mean, that was one of the easiest sales I've ever done on subject to.
Tim,
So
how did you get connected with that seller?
at that time, I was actually running a radio ad on a trading post type radio ad. I don't know if you know what trading post is, but people call in and they say, I have this wheelbarrow for sale. I have this lawnmower for sale, you know, $20. I have this, you know, truck for sale. And my thinking was, well, if all these people are calling in saying that they have all these things for sale, maybe somebody's going to have a house for sale. And that's exactly what I did. Is I was running a short little ad. Unfortunately, that radio station doesn't run that radio ad anymore. So I don't have it. I'd love to do that again. But anyhow, that's where it came from.
Hey, Tim.
Yeah.
It's time to stop and start the recording. And your question that you asked earlier about who's done a subject to, Michael Curtis is the only one who has said that he's done that. So
okay.